Welcome to the Daily Update. This is being prepared Friday, March 4th, where we will look at the action in the market today and then see how things look for Monday, March 7th. It was another down day. We're still within a range. Geopolitical events continue to be at the forefront of everything that's happening right now, which is really showing a lack of confidence in wanting to put a lot of money at risk. And those people that do need to have money trying to earn a return, we saw more of a shift over from the stock market, which is considered risk on, into more the bond market, which is risk off. Again, that's the conventional wisdom. Now, if you look at this in a practical sense, with interest rates at 2, 1.5, 1, below 1%, you're actually losing money when you compare that to the current inflation rate. So what's so risk off about that? But that's just my own observation of things. From a money management standpoint, it's kind of what you have to do. So anyway, the situation between Russia and Ukraine continues to be an evolving situation. There's a lot of conflicting information. As we're getting more pieces of the puzzle to put together, we're trying to figure out just what in the world is happening. It's not like that part of the world, which for me, I could say this part of the world shares truthful information. There's a lot of propaganda. There's a lot of false information out there. There's a lot of malevolent information, or what do they call it? Malinformation. And we're seeing a lot of that. That's been a real shift over the last few years within the US as well, where we're not just being told what's going on so that we can reach our own conclusions. We're being told what to think and what to believe. And a lot of times some details are really left out. And so that means that we as individuals need to take it upon ourselves to try to find the most truthful information that we can, reach our own conclusions, and then base our decisions in the market on that. And it may go against what you might personally believe or that you might think is the right thing to do. We have to adjust and adapt to current market conditions. Fortunately, or unfortunately, depending on how you look at this, because the market is continuing to chop sideways, we haven't had a lot of decisions to really make, especially if you are a trend-based trader. Now, we're seeing a big divergence between our trend indicator, the ADX, and actual price movement, where price has been in a range and going sideways. But the moves up and the moves down have been large enough so that the ADX is picking up on that and suggesting that we're in a trend. But the ADX itself has flattened out, but it is above 20. Now, is that going to continue? We don't really know, because anything can happen, either positive or negative, to shoot the markets either higher or lower. And I'll go through some of that. I shared a little bit in the video for Friday. I'll share a little bit more. I'm also going to be putting out a weekly video, and I'll go into a little bit more depth. I'm trying to do research myself to try to find out the truth, what's really going on here, not just what you're hearing regurgitated from the media, but what are the real facts underneath the surface. And so I'm going to need to spend some time really trying to dive in, because it's not a clear picture and we're seeing some real contradictions right now. And I'll point those out as we go through. This is a map that I showed in the video for Friday of Ukraine. And just to let you know, I'm currently residing just above where it says Belarus right here, up in the town of Minsk. So I kind of have a personal interest in what's happening right now. And I'm still trying to decide, okay, how bad are things going to get before I bolt out of here too? As a US citizen, I have the ability to get out of here quickly. So, but I have a family who are not US citizens, so that makes it more complicated. But just to kind of take you back and into what's happening here, is Ukraine used to be part of the Soviet Union. And I'm reading a book right now on Russian history, and I've always had an interest in that, mainly from the 20th century viewpoint, but now I'm going back a little further. And a lot of Russian history really starts around Kiev or Kiev. However, again, I'm probably butchering this, and no matter how I say this, I'm insulting somebody, and I apologize for that. I don't speak Russian. I don't speak Ukrainian. I don't speak Belarusian. So I'm an American in a foreign land who knows about 3 words. And if I try to speak more than that, people get angry at me, justifiably so. But the Ukraine was part of the Soviet Union. When the Soviet Union fell, roughly 30 years ago or so, Ukraine became an independent country, as did Belarus, as did Estonia, Lithuania, Latvia, Kazakhstan. We broke up into a big number of different countries. Well, Ukraine was always considered to be the real breadbasket for the Soviet Union. There's a lot of farms in here. There's also a lot of oil. There's also access to the sea, the Black Sea. And because here is the border between Russia and Ukraine, that puts Russia at a real disadvantage. And whether it's good or not good, Putin has decided that one of the saddest things that has happened in the 20th century was the fall of the Soviet Union. Now, he didn't really like Stalin or Lenin or Khrushchev or Brezhnev or any of those guys. He didn't really agree with them. What he liked was having all of this empire, all of this land. And if it's to his advantage, he wants to be able to take some of that back. After the Olympics in 2014, he did invade Ukraine. And some of you may remember that, but it was mostly Eastern Ukraine over here. At that time, Crimea was part of Ukraine. Well, they forced their way down in here and they ended up having an election where supposedly the people of Crimea voted with 100% success rate that they wanted to rejoin the Russian Empire. Okay, so that gives Putin more access to naval bases and access to the sea and a lot easier transportation. There's only one problem. Here is Crimea, here is Russia, and now there is a barrier between the two. And so what Putin has decided to do, especially with the change in administration in the US, because under the previous administration, he never would have tried this, but he knows he can try this with the current administration. He has decided to go back into Ukraine, especially Eastern Ukraine. And there's been a lot of really nasty stuff happening over here. You may have remembered that the whole Malaysian airline, the one that disappeared and we've never really been able to find. Well, not long after that, a Malaysian airline 777 was flying over this part of the world and it got shot down by, was it Russian separatists? Was it Ukrainian forces? You hear different things. But a lot of weird things have happened in here. And so when it looked like Putin was going to come back into Ukraine, it looked like he wanted to try to overtake this area. Now, it's not that this area is pro-Russian. There probably are some pro-Russian folks, and they speak Russian, and they border along Russia. But when they started coming into this area, there was a lot of resistance right there because they've been fighting for 8 years now in this area. So there were some resistance fighters sitting there waiting for these Russian troops, okay? But Russia is still a very powerful military force, with the idea then that with the help of Belarus, that eventually they would come down and be able to overtake the capital, which is kind of the beginning of Russian history. It would eventually go to St. Petersburg and to Moscow, but if you go back about 1,000 years, it really started in the Kiev area, which was heavily influenced by, well, it was Constantinople at the time, but now we know that as Istanbul, Turkey right now. And that's kind of the fear. I have some dear friends that live in this area, and I keep trying to stay in touch with them. And sometimes I'm able to talk regularly, but mainly through texting. We're not actually talking back and forth. Other times I go long periods of time and I don't hear anything because they're having to move and shift and hunker down and things. But what has been happening lately is that the people over here, they've moved the capital over here to Lviv, and that's kind of considered a safer place right now in Ukraine because right over here is Poland, which is an EU and NATO member. And there's a whole lot of American troops right here that are at DEFCON 2 right now, which means they need to be ready to go in 6 hours. Now, we are not an ally of Ukraine, nor are they an official member of the EU, although they're trying to join. They're also not a NATO member. So there's pretty much an across the board stance that folks in the US say, no, we should not be putting troops into Ukraine right now, because that would pretty much guarantee the start of a war. There's other folks saying, well, maybe we should establish some kind of a no-fly zone over this area. Well, how do you enforce that? It's not necessarily with troops on the ground, it's planes in the air, and you have an American fighter that takes out a Russian fighter, and boom, here we go, World War III. So it's not as cut and dry as we would like to make it seem. And we're still trying to figure out just what in the world is Putin doing? Why is he doing this? He's already, if not the richest, one of the richest people in the world, but he's pretty much chopped himself off. He can't go anywhere, can't spend his money. All of the oligarchs that he gets kickbacks from, they're starting to seize a lot of their assets. And the sanctions that we're seeing both on Russia and some on Belarus, because I'm also experiencing those personally, where my debit card works in some places, but not in other places. But it could get a whole lot worse. And meanwhile, we have the price of oil really going up. Well, the US buys a lot of Russian oil. As if you've heard of this thing called the Great Reset and the Green New Deal, and switching away from an oil-based economy to more of a green economy. Well, instead of waiting until those green things were actually operational and functional and tested and proven that they can do the job, we've started shutting down all of our oil refinery before and our oil infrastructure. And it's kind of interesting where in the previous administration, America was independent as far as oil is concerned. We were producing so much oil that we were actually selling it to other places. Well, when the new administration came in, that stopped pretty much on day one. And that has really backed the US into a corner, because what do we need to use for our planes and our tanks and all the equipment if we end up going to war? We need oil. We can't rely on solar panels and windmills and things like that, at least yet. So that kind of puts the US in a dangerous spot as well. So that's why this is getting so ugly. And I want to spend a little bit of time explaining this. Well, the other developments that have happened is down here in the South, because back in 2014, Putin did take Crimea, and they officially, or I don't know if you want to call it officially or not, they became part of Russia again. But there leaves this big gap right here. So Putin wants to go back in and overtake this. But now what we're starting to see are some of these cities in the South are being overtaken. And in fact, on Friday, what happened, there's the next, and I can't even begin to try to pronounce this, but this is a nuclear power plant. You see way up here, it's Chernobyl. You probably have heard of that. There's another nuclear plant over here, but look at how many circles there are here. The report that I read said that this nuclear plant, that there's no fear of radiation, excuse me, there's no reports of radiation right now. There was a fire at this facility, but but this nuclear plant is supposedly 7 times larger than Chernobyl. And if there was some kind of a meltdown, it would pretty much wipe Eastern Europe out, including me in Belarus. And it could be just a mess. Of course, people have a tendency to freak out over nuclear power. And there's a big debate that you could take with that as well. But we need to keep an eye on what's happening with this. What if some rogue people get into these nuclear plants? Because the last I heard is it's still being run by the Ukrainians, but at gunpoint of the Russians. So that's a good work environment, don't you think? But that's kind of where we're at the time I record this, and that's bleeding over into the market. Now, I do have a personal interest in this stuff. Not even if I was in the US, I would still be telling you what I'm telling you now. I have more of a vested interest because I'm living in this area right now. But the reason I bring this up, and again, I'm trying not to throw opinions out, I'm trying to throw facts out here for you to make your own decisions, is this is part of the unstable situation that we're dealing with. And then in the background, and I'm hearing conflicting reports now that they're negotiating with Iran at the Vienna talks, and they may lessen a lot of the sanctions that we've had on Iran for a long time, and that may put them more into play. And one thing I'm going to mention here is probably controversial, but I'm going to go ahead and mention it anyway. There is a source that I use for information, and it happens to be called the Bible. And in the Bible, there is a mention way back, probably 2,600 years ago, maybe 2,800 years ago, in the book of Ezekiel in the Old Testament about a war, and it's chapters 38 and 39. I would challenge anybody to read that. And it is predicting that at some point a big war is going to happen. And even the History Channel has said the Bible has 100% track record when it comes to predicting things. Now, you may believe that, you may not believe that, but a lot of what was written 2,600 years ago seems to be being played out right now. Now, we thought this in the past, only to have things calm down. And you've got a lot of people that anytime they see any action in this part of the world, they go crazy and they think, here it is, this is it, man, we're really going to town here, it's all coming true, only to have things not turn out that way. That may be what happens here too. But in this prophecy that is told is that Russia, and most people agree that who it's talking about there is Russia, and then a country called Persia, which was called Persia up until they changed their name to Iran. And they are eventually going to team up together, which they kind of been doing here. It's not like we're friends with we're not friends with Russia, and we're certainly not friends with Iran. But ultimately, they want to wipe out Israel, and that is leading potentially to a big war that throughout history has not happened yet. So we have to conclude that it still has yet to happen in the future. I'm trying to keep it as factual as I can, just because that where I'm basing these things is on reality, okay, and what we're seeing. And so that's another reason for paying close attention to this. But I'm with the Iranian talks, some people are saying, yes, we're going to really lessen the sanctions because we need Iranian oil. I mean, can you imagine that? I mean, this is a country that has kind of, well, they declared war on us in 1979, and we haven't been friends since then. And if you grew up when I did in the 70s, you did not like Iran. I have no problem with the Iranian people. I met Iranians. I have some friends who are Iranians. I have no problem with them. It's their leadership and their approach and their mistreatment of other people and women and children and so forth. But if you see the two of them coming together, and if they eventually work their way down to Turkey, modern day Turkey, that is just another piece in the puzzle of this war that potentially might be in the works. It could all calm down and might not happen for 1,000 years from now. We just have to look at what we're seeing right now and go with it, realizing that things they will change. We just don't know in what direction they will change. Another thing, this is getting back more to economically what's happening. This is a thing called GDP Now, and it's connected with the Atlanta Fed. And right here it says the GDP Now model estimate for real GDP growth, they set it down to 0%. Based on the economic reports that are coming out, that was changed back on March 1st to last Tuesday, that we're at 7%. Isn't that what we're at right now with GDP? Well, they're estimating now the GDP is now going down to 0, and that might be a good explanation of why we're seeing what we're seeing in the charts. We're starting to see more of a potential economic slowdown. Now, some reports that are coming out are showing growth. So we are seeing very high inflation. In some areas, we're seeing growth in the economy, but in other areas, we're seeing things really start to slow down. And this is kind of boxing things into the corner. And so this is freely available. If you want to find this yourself, this is just a screenshot of their most latest report. Just Google GDP Now, all is one word, and it will bring you to this. And there's even a little video that you can watch to see. But you can see where they'd actually had predicted that GDP was going to be negative. This is updated every time some reports come out. And so it's more of a real-time adjustment to GDP. Are they right? Are they wrong? Yes, no. But there are participants in the markets who pay attention to this and base their decisions on this as well. So we need to be aware of that. So let's go back and look at Friday. The open, we did have a gap lower. The futures were decidedly negative. Asia was down, Europe was down. That pulled the S&P futures down with all these geopolitical things. We gapped lower. There was initial selling all the way down to 42.85. That was not a support level in the S&P. It's kind of a round number. There's a lot of strike prices right there. So we were able to bounce up off of that. We went back up to about S1, 43.34. But then we started selling again, and that took us down to the 4,300 level at S1. Let's see, rebounded to S. That should be S2. I'm sorry, that was a typo right there. Took us back down to S2, and we were down decidedly for most of the day. But the last 10 minutes, we saw it was. I don't know if it was a buy program or something, but the S&P spiked up over 20 points. Now we were down for the day. We ended up being down 0.79%, but that it would have been a lot worse had those last 20 points not been brought back into the S&P 500. Volume was above average. We're still looking at the technicals. I'm more mixed right now in how I'm seeing things. We're coming kind of close to the end of earnings season. I read something that about 92, 93% of all S&P 500 companies have now reported. So we're kind of getting near the end of that. And that's another reason for waiting on my valuation charts, because I look at things looking at the earnings going forward. Well, I also look at things going back, and I'm kind of waiting for those things to readjust after this latest earnings season before I can kind of make more of a relevant evaluation of things. We're still battling with inflation. Interest rates are all over the place, and of course the big geopolitical concerns. So what else can we say about Friday? The S&P, it's just barely, and the way I calculate it, just barely out of correction territory. The technicals are improving. Some of them had a little bit of weakness on Friday, but overall, a lot of them are improving. We're back down below 20 now with the CNN fear index. Prices continue to be in a range. Of course, Russia, Ukraine dominate the news. Oh, and I didn't I did mention the nuclear power plant that they seized. That's kind of scary when you start getting into nuclear power plant stuff. Not because nuclear power is evil or good in and of itself. It's the potential of what could go wrong with that kind of a thing. Oil is now above 115, my gosh. And then this is what I talked about with the GDP Now, where they've that's not an official estimate, but it is kind of an extension of the Atlanta Fed, which is part of the Federal Reserve System. So it's something that we should pay attention to. And they lowered their estimates down to 0. We had the big report, and this is usually the monster report of the month. It came in with a lot of new jobs being created. Earnings were pretty much flat, which could really feed over into consumer spending. But because of the whole geopolitical backdrop, that report was largely ignored for right now. The market is still overvalued. Our trend is pretty much flat right now, even though it's above 20. And the bias I'm saying is negative to mixed, and the momentum is also negative to mixed. So let's go through the day's session as far as sentiment. Yeah, we're down at 17 now. So we are below 20. So we're getting down into this extreme fear area. We got a lot lower than that in the COVID plunge, but there have been some other times when this did mark some kind of a low in the market. But we were here a couple of days ago to go back up and then come right back down. The VIX did climb on Friday, and we closed, well, kind of closed up here on the bar chart as prices, and I'm going to wait to talk about this bar until we can see it a little bit better. But fear did increase on a closing basis, but we closed near the bottom of the bar for Friday. Here's the Vixen, also saw an increase in fear, as well as a little bit of an increase on a closing basis. Here's the Ulcer Index, just something to keep in mind. As if the Ulcer Index is going down, that means there's less fear. As it's going up, that means there's more fear. At a little bit of an upturn and just a longer term view. Our sectors, let's see, financials kind of got hit the hardest in here. Technology, which has been getting hammered, discretionary. Okay, and then there were some sectors that ended up positive. Staples, healthcare, real estate was up a little bit more. Utilities, of course, energy going up pretty solid these days. And here's energy performing the best since the all-time high, with discretionary performing the worst since the all-time high. As far as inflation, the BDI declined a little bit. And then I have two charts here, and I'm not really sure if I'm going to keep the second chart. This is just the CRB index, and you can see how we're just spiking up and up and up as inflation continues to be more of a problem. This next chart is called the comma dollar, and this is the commodity dollar. And what this tries to do here up in the top is the S&P. This tries to take out currency fluctuations. Well, you can see how this has just been screaming up and up and up as we've been worried more about inflation. And this is causing stocks to decline right now. Just something we want to watch and see if this I look at this chart every day, but it's the first time I'm including it in a video. As far as the Fed watch, a week ago, we were pretty sure that we were going to have a 0.5 to 0.75% move up at the meeting coming up on the 16th. That is gone now. We're at a 98.8% chance of a 1/4 to 1/2. And what crept back into the markets over this week is they're starting to pick up some of the weakness in the market. And you have a very small percentage saying that interest rates won't be changed at all. And the fact that this is even back on the table, to me, is what makes it surprising. Yeah, the odds are heavily favored over here, but just the fact that this is still there. So we can see our longer term chart where we're coming down with the 0 to 2.5. we're pretty much topping out as far as the quarter to half, but it's decreasing ever so slightly, where the half to 3/4 is pretty much gone right now. Technical alerts, kind of a mixed bag depending on your view. NASDAQ went below 13.5, then 13.4, then 13.3. The euro set a 52-week low at the very top. The dollar set a 52-week high. The euro crossed below 110. The dollar's at about 97 now. What's going to be really interesting is if they get on par with each other. If you have the euro equal to the dollar, that's kind of an interesting thing. Energy sets a 4-year high. The S&P did cross below 4,300. Things are picking up a little bit in Canada with another bullish MACD crossover. First, we had oil cross above 110, then it crossed above 115. So that's just skyrocketing right now. Looking at the intraday chart, we did gap lower. No attempt currently to even fill this gap. And we saw pretty strong selling right out of the gate. Took us down below S1, even below S2. I was getting ready to see, do I need to put an S3 on here? But we didn't go down quite that far. We got down to around the 42.85 level before we saw a bit of a rebound. Took us back up through S1. Then we came back down to S2, and it looked like we were going to finish off that way. But then we saw some late day buying coming in that actually helped things out a little bit. It repaired a lot of the damage right at the end on a closing basis. Here's what it looks like on the chart. And this is actually a little bit more positive. You can see we have a breakdown bar, but we closed near the top of that bar. So again, half full, half empty. You can take your pick on how you want to see that, but we're back in this range. We really haven't gone anywhere. We've been here before. It's like a family reunion. We are still in retracement territory. We're down 9.75%. So if we have a little bit of a fall on Monday, boom, we're going to be back over 10% with the way that I calculate things. Growth continues to decline as value continues to advance. And this also bears that out, where the growth compared to value is still showing a decline. But are we going to break below this low that was set recently in February? We're waiting to find out about that. Are we really seeing a change in leadership? NASDAQ 100, it's right down here where it was before. It is really underperforming the S&P 500 currently. As far as our trend, this is what I'm talking about. The last few days, the ADX is really kind of flattened out. Even though it's above 20, it is going sideways, and the moving average is right about on top of each other. We did see a bit of increase in buying pressure and a decrease in selling power on Friday. And because these lines are so far apart, that's why we're getting an ADX reading that's so high right now, but it is flattening out. Mass index, we're just waiting to see if something can happen. And I'm not really sure what the window is for this. A signal was triggered near the end of February, and we're still just waiting to see if something is going to happen. Then the Arun, this is pretty much showing what it was showing before, where, yeah, we had a down day, but selling pressure decreased, buying pressure, buying power also decreased. So overall, we are flattening out when we compare the two. No change in the decision point scoreboard there. As far as breadth, negative because we had the down day, but we're still above the moving average based on price, and declining and showing the negative divergence based on volume. The AD ratio also below 0 and saw a bit of a decline. This is more encouraging. Even with the down day, we saw an expansion of new highs. Yeah, there were some new lows, but overall, we're seeing an overall uptrend. Even with the down day, we still see the accumulation distribution advancing. That's where we're getting this mixed picture from. It looked like maybe these 20-day moving averages might come into play. Well, they kind of did as resistance. We've now backed down from that. Moving average study, decline based on the 20, sideways on the 50, sideways to slightly down on the 200. We're well below all of the moving averages now. We lost this 200-day exponential moving average, and you can see these are starting to go a little bit further apart. The difference between the simple and 200-day calculation. So again, if we want things to get back more positive, we're going to have to regain some of these moving averages. The MACD, though, continues to be positive. Yeah, imagine that. The STO, it's picking up the decline, but it's still slightly above zero based on price and volume, but it did decline. The McClellan oscillator, which just so slightly went positive, has now gone back to slightly negative. The stochastic RSI, after shooting up into an overbought reading, is now dropped below, and this would be an official overbought signal now because we've dropped down. The Williams percent R, it's a little more confused. It's kind of rolling over in about the mid-range right now. Force index with the decline on Friday, we had been a little bit green. Well, now we're turning more red. Intermediate term, well below the 50 period moving averages. The PMO is trying to cross over positive and looks to be improving, but we haven't really crossed yet. The PMO study, we're seeing a decline on those PMOs that are rising. We are seeing a bit of an increase in the buy signals, but we have flattened out with those PMOs that are above zero. The BPI, which had kind of been giving us a little bit of hope, it looked like it was coming up nicely. Well, it declined on Friday. And here's another, it's actually a little harder to see on this chart, where we saw an increase in the selling signals. Okay, the rainbow. Yeah, we're trying to get back up into the bottom of the rainbow. And as that's happening, we're starting to see more of the shorter term moving averages roll over. Stochastics, even with the down day, they're turning a little bit negative short term, still positive long term, and intermediate term and positive long term. The summation index, I tried to point this out where we're still seeing a bit of an advance on volume with this, but price has gone sideways to slightly negative again. But this could be something positive. When we see a turn up in volume before price, sometimes that can lead to good things. There's a mix right now with our momentum oscillators. Some of them are negative, some of them are positive, some of them are trying to cross and looking weaker, some are trying to cross and negative and looking stronger. Real mix right now with these. The vortex is kind of flatlined based on buying pressure. It declined a little bit on selling power. Selling, yeah. The CCI, and I keep threatening to stop looking at this, but we had gone ever so slightly with this indicator. Well, with Friday's decline, we're now back negative below zero. RSI continues to be below 50 and declining. Trading systems, the Elder system is now back to negative. It had one positive day there, then it went back to neutral. Now it's back to negative. Where the SIR, it's still hanging in there. That's why some of you might really like this and base some decisions on this, but look at the emotion that you'd be going through right now. We were trying to see a series of higher highs and higher lows. Well, that kind of got wrecked on Friday, but this thing is still giving a positive reading. Different charts, the Heiken Ashies turned more negative after Friday. The Kegi, now we've turned back to black. That's a little more negative. The Renko, it actually switched things up a little bit and is actually a little more positive than it was. It was showing all red boxes. Now it put that clear box back in there. The 3-line break, it's trying to show something positive that potentially could be happening. Equi-volume just shows, see all this kind of support level where we're at right now. But we continue to be, it just shows us really that we're in a range. Nothing new on the point and figure chart. The last signal that was generated is a low pole reversal. unless we can see some more upward movement, that eventually that signal will go away. Stochastics, we're kind of bouncing between the 38.2 and the 50% retracement back from this low set in early 2021 to the all-time high. Long-term arithmetic scale, we're below arithmetic. Why do I want to say that in a fancy way? We're below the moving average, but longer term, it hasn't really rolled over yet. Same thing with the logarithmic scale. KST continues to be negative, and here's the longer term look. Broad market, we've come back down into the lower range of where we've been with the S&P. We could go lower from this. Some people are thinking, well, maybe we'll go test this low again. It was really looking positive when we bounced up from that, but that might be, the party might be ending early with that. We're back down in the range, mid caps in the range with small caps. FANG stocks down over 2% on Friday. Closed a little bit up off the low, but nothing really to brag about. Kathy had another bad day with ARC down 4.79%. The Dow itself, it was a little bit below the pivot on Thursday. Well, even though it closed near the high for the day, which is encouraging, it is still a little bit further below the pivot level now, but more into this range. Same thing with the small caps, a little bit above the pivot and within a more congested range. Same thing with the mid caps, although it's a little bit below the pivot. The NASDAQ closed kind of closer to the low and below the pivot, so that's a little more negative. And NASDAQ 100, kind of the same thing, below the pivot, it's a little bit off the lows, but we just saw a recent death cross here. Vixen closed in about the mid-range, so fear had been a lot higher. And as we saw the late day recovery, right, especially right into the close, a lot of the fear was taken off. NYSE still within the range and below the pivot. The S&P 100 continues to underperform the S&P 500. Wilshire back in the range and below the pivot, where we were right on the pivot after Thursday. Pretty much across the board declines internationally right now. And our all stocks ETF, it kind of broke down to a new low. It had been a little bit congested right here. Well, on a closing basis, it actually declined. Broad market, here is the dollar. Look at this, 98.67, and really showing some strength. And here's the weekly chart, which is also showing that strength as well. Oil, up above 115, and we closed at 115.58, if I can read that the right way. We got up into the 116s there for a while. You have to wonder, when you see a parabolic skyrocket like this, sometimes that might signal some kind of a top. It doesn't mean, but we might see a whole lot of shooting higher. And there's reports that have come out from, let's see, Bank of America, JP Morgan, saying that, yeah, we might go up to 200. We might stay around 125. A lot of the US economy is built around oil being at $100 a barrel. It's all speculation at this point. We just, you've got a lot of smart people who are trying to figure this out, and a lot of them coming to different conclusions, because we don't really have a full picture of what's happening right now. Gold, it was up almost 1.6%, but we still want to see if it can get back. And this is the futures contract. And the ETF, GLD, actually, this might be showing some kind of a breakout now. Silver also had a 1.5% move. So it's, and if you look at this recent action, that's pretty positive right now. But we've had these things happen before, only to see things fall back. Yes, yes, yes. And then another one that I haven't been showing lately is palladium, because it had just been declining. When I was showing this, it was really skyrocketing up, then it fell back. Well, now, boom, look at that. It is just shooting up. Another precious metal, and I keep an eye on this, and you can see a real increase in volume as prices have been going higher. Copper, I haven't shown that either for a long time because we've been in this sideways mess for such a long time, but it actually broke out to the upside. Now we're waiting to see, is that a breakout or a fake out right now? Bitcoin kind of still struggling a little bit. It had been in the mid 40s. Now it's getting down into the low 40s, and it's even possibly in danger of dropping below 40 right now. Bonds, again, we're trying to play out the scenario of what we're seeing here with the credit spread. A lot of times when we see this decline, that means a tightening Fed, tightening monetary policy. But we're also worried about a weakening economy. And as we continue to go down and down and down, and the financial media is going to go just bonkers if we do get down to this level. That's where we see an actual inverted yield curve, where short-term rates are higher than long-term rates. And that doesn't always mean that there will be a recession, but if I remember right, every recession has had an inverted yield curve before it happens. And this usually gives us some kind of headway, some lead time. You can see back here in 2006, 2007, we were experiencing an inverted yield curve, but things really didn't turn bad until after that. Well, back in 2019, we saw this in the fall of 2019. It wasn't until February of 2020 when we had the whole pandemic breakout. So we're just keeping that in mind right now. We're just watching it. With the 10-year yield after falling back down below what had been support, we are declining as far as interest rates are concerned, which again, inflation is high, but yet interest rates are falling. And it's just really strange right now, where across the board, 30, 10, 5, 2, all saw a decrease in their yields. And even with the 3-month as well. Internationally, the German Bund has now gone back negative again. And you're seeing a lot of interest rates really declining across the board. Bonds were up slightly with our world bond index here, but they're still in an overall downtrend. Corporate bonds bounced up a little bit on Friday, and here is the current yield, which is right around 3.31%. That's actually from the 3rd. That was actually after Thursday. I haven't received the update after Friday yet. Just a longer term view of the yield. Relative studies, gold versus the S&P 500. It saw another 2.4% increase as far as gold outperforming the S&P 500. Gold was up, the S&P was down, so we're continuing to see a breakout with a potential, well, it is going to be a moving average crossover. Energy also breaking out as well when compared to the SPY. So what are we looking for on Monday? The S&P is just out of correction territory, a little bit of a decline, and boom, we're back in there. The markets remain in a short-term range. Earnings season continues, but we're getting near the end of that. There's still that battle between growth and value. On Monday, we have consumer credit coming out. And if we see a real spike in this, this could lead to more of a fear that the economy is slowing down because people are having to live off their credit cards and they're going into debt just to be able to pay their bills. Geopolitical events, of course, Iran, the talks still continue in Vienna, and we have the Russia-Ukraine situation. So what I'm concluding is the S&P is mixed and range bound overall. Short term, negative to mixed because we've had 2 down days in a row. Intermediate term is more mixed right now. The long-term bias does remain positive, but is still showing weakness. And the longer we're underneath that long-term moving average, that uptrend could be fading. So have a very good weekend. I do anticipate being able to prepare a weekly video. I hope some of you enjoy that. And I will talk to you again for the daily video after Monday's market session.